And basis can be complicated.
Sure.
And we talk about it. We throw the word basis around, and we've had people call and say, okay, you guys talk about this, that, and the thing. What does it mean? The terminology that sometimes we take for granted, understandably, it's kind of a different language for a lot of people. We talk about basis points. Is that the same as basis? No, they're different things.
No.
So some of this we just have to put everybody on the same page.
Yes, because there are times when we talk about things like Roth IRAs, or we talk about traditional IRAs, inheriting the IRA, and we say, and don't forget, for the traditional IRA, there's no step up in basis. Boom, we move along.
Or there may be basis in an IRA. Well, how could you have basis in an IRA? Is it based on the account? Is it based on the investment? You guys are confusing the living heck out of me.
So we'll use this opportunity, I hope, to talk about this. Now this connects to gifting as well. Gifting. And
inheritance. A discussion I had with somebody last evening.
In fact, you want to go... let me give the phone numbers. If you're inclined to call, 877-PLANNER, PLANNER, 877-752-6637. We'll take your calls. We'll take your emails if you go to our website, wealthed.com, and send us an email there at wealthed.com. All right, so let's go over the scenario that without getting too complicated, of course.
Yes.
Because I know what the situation is.
Well, I was talking with somebody, a nice lady in Georgia yesterday, and she was asking about a waiver of a certain issue, and it had to do with inheritance taxes at the state level, and luckily her state did not require that for the distribution of assets after a death. Didn't mean that they could just start distributing money, but in their state they didn't need this thing. But it brought on other questions about, okay, so if we distribute assets to the heirs, is that a taxable event? Is it a gift tax? Is there some form of tax that we have to pay?
You mean just them inheriting all their stuff?
Just inheriting the stuff. Whatever it was. And this was not a spousal situation. It was somebody inheriting. At least it wasn't to start with, but we got into deeper questions as we went along.
All right, but let's assume for the moment it's like kids or whatever.
Right, and so then the question came, okay, what kind of tax are we talking about? The state that they lived in for this particular size, it didn't have a state transfer tax. It was well under the $11,200,000 that the federal government allows for the exemption from inheritance tax, estate tax. So there was no transfer tax. A transfer tax is when the money moves from one person to another person, not from a purchase or something, but just either during their lifetime, which is a gift, or after the person dies, which is an inheritance. And that's the key there. Is it a gift or inheritance? And that's one set of tax laws. And those sets of tax rules are completely different than income taxes. And unfortunately, we get these confused, and so there are different tax systems. So from a transfer situation, there was no federal transfer tax, estate tax. There was no state death or inheritance tax.
That's good.
Now, probate is a different issue. That is the state courts retitling things. But in this case, there wasn't anything going to happen there because of joint tenancy with rights of survivorship and some other things. So we didn't have to worry about the actual transfer of asset from the decedent to the heirs.
You mean from a tax standpoint?
From a transfer tax standpoint. Gift tax, inheritance tax, things of that nature. But that didn't mean that there might not be some taxes paid by the beneficiary or not paid. And that comes back to what is it that they're inheriting. Are they inheriting an IRA? Are they inheriting property? Are they inheriting personal bank accounts, brokerage accounts? What is it that is being transferred across to the individual? And in this case, there were several things. There was some property, there was cash, and there were some brokerage accounts. And so we had to look at, okay, so what do we have to pay? And there were some IRAs too. IRAs do not receive what's known as a step-up in basis. So this gets us to our topic for today. What is basis? Well, basis is basically the starting point for determining gain or loss. For most people, while we're alive, basis is what I paid for it. If I buy a stock for $10, my basis is $10. If it goes to 11, 12, 13, or it drops to 4 or 5, my basis is still $10.
This is $10 of personal money that you put in. This is not in an IRA. This is just $10 that you wrote a check for.
My basis is what I have already paid tax on. My basis is the starting point for determining gain or loss going forward when I ultimately sell this asset. So if I paid $10 for it and I'm holding it for a series of years, it doesn't issue a dividend, it doesn't do anything, and a couple years later I sell it for $12.50, there's a $2.50 gain. The difference between my basis, what I paid for it, and what I sold it for, the $12.50. That $2.50 is a gain.
And that's what you would be taxed. That would determine the tax. You would pay tax on that particular gain.
But my basis can change from time to time.
It can. And if you can raise your basis from $10 in your example up to $12.50 and sell something, then there is no tax on that. All right.